What an absolute banger of a week if you were short in the market. We had Apple completely get destroyed. We had the S&P 500 lose almost 6% today. It was an amazing, amazing week, folks. Welcome back, though, to Trades and Gains, the only place where we cut through the CNBC fluff and get real about what's actually moving your money and the markets. If you thought Thursday's 1,700-point drop was bad, well, Friday said, hey, hold my beer, brother. I got something to show you. The Dow Jones was down 2,200 points. The Nasdaq is officially in bear market, and the S&P, it just clocked its worst week since 2020. And yeah, we're blaming tariffs, China, Powell, and a market addicted to cheap money. Let's go ahead and dive right into this. So, it all started Wednesday. Trump dropped the Liberation Day tariff bomb. Blanket 10% on all imports, with bad actors like China facing an added 34%. That's a 54% total tariff, which is massive, folks. Wall Street tried to laugh it off, but on Friday, China hit back, with the 1-2. They announced matching 34% tariffs on every U.S. product starting April 10th. It's economic warfare at its finest. We're out here playing checkers. They're playing chess, baby. We're about to get destroyed. Anyways, what was the market fallout in response to this? It wasn't great. I can tell you that much. It was not great. The Dow is down 2,200 points, aka minus 5.5%. Correction, cha-ching, confirmed. The Nasdaq is down 5.8%. It enters official bear market down 20% from its all-time highs. And the S&P 500, again, lost 5.97% in today's action, down over 10% in just 2 days. That's crazy. Granted, you could have turned $100 into $10K damn near in these market conditions. Now, this wasn't just a sell-off. This was a margin call moment. Over $2.5 trillion in value was wiped completely off the board today. Now, let's go ahead and talk about some of our macro stuff going on today. Recession risk is 100% back on the board, and it's in the driver's seat while drinking. Even the March jobs report, normally a big headliner, it got absolutely buried. 228,000 jobs were added, but unemployment ticked up 4.2% versus the 4.1% that we were expecting in the market. No! So unemployment's going, recession is brewing, folks. It's a brewing like two witches over a cauldron. The Fed's been stuck between a hard rock and a punch bowl currently. They need to maybe stop. They maybe need to drink the Kool-Aid and end it all. Who knows? Powell admitted Friday that tariffs could cause persistent inflation and slower growth. So what's the market doing? Pricing in 5 rate cuts in 2025. Now, let's take it sector by sector. Let's talk about what happened. We got Apple was down 9% in 48 hours. Then you want to know why? Because Apple sources 90% plus of its iPhones from China's market, and tariffs are now at 54%. Nvidia, they weren't even safe. They lost 8% with supply chain deeply tied to Taiwan and China, both with high tariff rates. And Tesla was down 11%, already under pressure from falling EV demand, now slammed by global supply costs. The Magnificent Seven lost over $1.2 trillion in 2 days, to give you perspective. And Amazon also lost $7.41, so they weren't really safe either. Banks also just got beat the hell up, people. Goldman Sachs, JP Morgan, MS, they are all down 7 to 10% respectively, and KBW Bank Index fell nearly 10%, the worst day since March of 2023. That banking crisis, remember? I mean, we can recap that later. Retail, Best Buy, Wayfair, and Nike all nuked. Tariffs are hitting their margins hard. Nike didn't really nuke because I know a lot of their stuff's in Vietnam, and Vietnam's trying to, like, diffuse the situation. Energy over here, we had oil sinking. Oil dropped 8% on China's news. OPEC announced a surprisingly supply increase as well. And copper and other industrials also got smacked. Now, our safe haven, gold held up decently. Treasuries rallied. The 10-year yield dropped to 3.9%, the lowest since October. And oddly, Bitcoin's up over 2%. Analysts say corporate treasury demand might be helping. Bottom line, investors aren't moving to safety. They're evacuating and leaving the kids in the pool. Now, let's move on to our next segment that's sponsored by Investor Central Club. If you want quick, actionable insights, go to investorcentralclub.com and sign up today, because honestly, it's one of the easiest ways to read market flow. It's how you can catch actionable insights, institutional moves, whatever you're looking for, whatever your flavor of the week is, sweetheart. Anyways, let's move on to our next segment where we're going to talk about our dark pools to kick things off. So on Friday, SPY. So let's kick it off with the dark pools. If I can get it to do what I want it to do. All right, SPY saw over $2 billion in dark pool activity. Major blocks printed around 505 and 508. That's institutions quietly building or unwinding massive hedges currently. QQQ was a similar story here. We saw 500 million in block trades, most of it at the lows. These weren't bullish bets, they were protective armor. Now, let's talk all flow here. SPY led the day with 414 million in total flow, with 28.96 million in calls versus 385 million in puts. Yes, you read that right, 385 million, with our most common contract of the day being the $510 put that is expiring on the 17th of April. So we are expecting more blood here, folks. Lots more blood. And that's a wall of protection that institutions are building to hold their positions, to tell you that much. Now, NVIDIA also saw 117 million in flow today, with 57 million in calls against 59 million in total puts. There are massive $85 puts for the 17th of April as well. So we're expecting some more blood there, again, because China and Taiwan is deeply tied to their production. IWM, whoop whoop, getting back in the action, baby. 103 million in total overall flow, 3 million in calls versus 100 million in puts, with our most common contract being the $175 puts expiring on the 17th of this month as well. So be on the lookout for that. Now, the biggest signal here is the rotation into defense. We saw blocks in VU, IVV, TLT, classic flight to safety, and in options, HYG, which is a junk bond ETF, by the way, saw 124 million in call volume, and that's defensive repositioning. Smart money is prepping for a Fed pivot here. So what happens now? Volatility stays elevated, the VIX is waking up, and institutional positioning shows no confidence in a bottom. Until we get clarity on tariffs, inflation, and the Fed's stance, expect more chop, expect more blood, and expect more fakeouts. Stick with us, though. We're not just watching the headlines. We're watching where the real money moves, thanks to Investor Central Club as well. We're going to keep this one short and sweet for you folks today, because it's Friday. You want to enjoy your weekends. And that's your Friday week recap from Trades and Gains. If you found value, hit subscribe and drop a comment. Bear mode engaged. We'll be back Sunday, with our weekly outlook report with a fresh round of data that is going to send the markets downwards. Anyways, I'll see you guys in the next one. Stay sharp, stay savage, and don't get played. Love you all. Mwah.